Anuj Gupta, commodity expert, joins us on the show. Mr. Gupta, thank you so much for taking time out and joining us this afternoon. One thing that we're looking at right now, of course, we're looking at gold and oil as well, but, answer going in terms of silver, you were talking about supply concerns. In terms of it being the sixth year of supply deficits, there's quite a lot that you're looking at when it comes to supply for silver.
Definitely, supplies are very, not as per the demand, and we saw again a supply deficit in the market. So that is also providing the support. Even the safe haven demand is also providing support. The industrial metal demand is also providing support. But yes, the higher crude oil prices are also increasing the fear of inflation. So that's why we have seen again hedge against inflation or demand against inflation is also providing support to the silver and gold prices.
No, absolutely. So when do you see this support sort of weaning a little bit, or are you expecting upward momentum to continue from here on? What is your outlook, at least in the near term?
See, we are a little optimistic for gold and silver prices because the uncertainty between U.S. administration and Supreme Court is there, and U.S. and Iran is there. So definitely, the uncertainty will be there. So we are expecting in a shorter term also gold and silver may rise from here. And for the silver, we are expecting silver may test $95 to $100 in the very coming time, and also we are expecting gold may test $50 to $100 per ounce in a very short term.
Got it. When you talk about gold and silver, if somebody's already invested, be it through the physical metal itself or through ETFs, what is the outlook that you'd be suggesting to them? Because there's actually quite a lot of volatility that they're looking at right now. Do you think that they should sort of sit by on the sidelines, wait for the dust to settle a little bit?
We are advising always that one should use the process to start investing in gold and silver ETF. So if somebody had a position on a higher level, so that's a time to average out the position from here. And we are expecting if they hold the position for the longer term perspective, we are again very optimistic for the gold and silver for the longer term. And we are expecting if somebody start investing from that level, they can get a good ROI.
Absolutely, it's ROI that is quite the word in this particular market, because that's something that is a little bit missing in terms of that volatility that we've seen of late. Last year you did have investors really making it big when it comes to their returns, but this year the momentum is a little bit of hitting a roadblock, at least when you talk about silver as well. Manages to recover, but then sort of gives up some of those gains. But when you talk about oil, Mr. Gupta, I was talking about Goldman Sachs talking about how there's a geopolitical risk premium. They're talking about how the prices, despite that, are also going to be pulling back from here on, and by the end of 2026 or even perhaps 2027, they'll actually script a comeback. Is that the sense that you have as far as oil is concerned?
See, currently oil is trading around $65 per barrel, and latestly we saw a sharp correction in the US inventory. So that will provide support to the crude prices, and definitely the geopolitical concerns between US and Iran that will also, putting pressure on the supply side. So we are expecting crude may also rise from here, and expecting $70 to $75 per barrel in a very short term.
No, absolutely. And when you talk about gold and silver, which is the bet that you're more bullish on right now at this point in time, given that there's a lot more volatility on the silver side, but on the flip side, if you are the devil's advocate, there is also a little bit of scope for the devil's metal to also be giving you a lot more returns if the last year is to be trusted. So gold and silver, which is the bet that you're more bullish on at this point?
See, I am a little bit more optimistic on gold this time because the geopolitical concerns are there, and definitely this will provide support to the gold as a safe haven demand. So I'm a little bit more optimistic for the gold prices, and expecting gold may test till the Diwali, I think 5,500 to $5,600 per ounce.
No, absolutely. And before we let you go, quickly wanted to get a word in as far as copper then is concerned. And which investment method do you suggest people should be looking at, investors should be looking at right now? Should it be through some of the listed players right now, or should they be looking at futures, given all of the volatility that we have, and given the fact that copper is a little bit of a complex market to also understand?
See, we have only an option through the MCX to trade in the copper. If we talk about the derivative trading or futures trading, so one can use that platform to start investing or trading in the copper prices. Otherwise, they have an option for the physical side. We don't have ETF right now. Definitely, copper is also looking very, positive for this year also. But we are expecting little bit. A range bound momentum kind of thing in the copper because we saw a sharp momentum in 2025. So we are not expecting right now a sharp momentum in the copper. We are expecting for the shorter term a range bound momentum kind of thing in the copper.
Well, absolutely, and thank you so much for helping us out with that update there.